trying to truly grasp a company as immense and, well, constantly evolving as Amazon can feel, like looking at this vast shifting ocean, right? The stock price just bobs and weaves, headlines pop up constantly. And it's just incredibly tough to cut through all that noise to figure out what's really driving things underneath. How do we get to those core insights, quickly and effectively without getting totally swamped? Well, that's exactly our mission today. We're doing a deep dive into Amazon, ticker AMZN. We're going to combine both the crucial technical chart patterns, basically, what the market's waves are telling us about sentiment and price, with its underlying fundamental financial health. That's like understanding the powerful currents of the business itself.
Precisely. And our goal isn't just, listing data points. It's about extracting the most important nuggets of knowledge and insight from everything out there.
Yeah.
We really want to give you a clear, concise picture of where Amazon stands today and what could genuinely be on the horizon. Think of this as your shortcut, sort of, to being really well informed on one of the world's most influential companies. We're aiming to provide the so what behind all the numbers.
Okay, so to really understand these Amazonian waters, let's start with the big picture, the sweeping ocean currents, if you will, the monthly chart. What are those long-term trends telling us? Looking at that monthly chart, the story is, well, it's one of undeniable bullish momentum. Amazon stock has been consistently forming higher highs and higher lows, which, for anyone less familiar, that's the textbook definition of an uptrend. The stock keeps hitting new peaks and setting higher low points, classic sign of strength. It's also been breaking structure above key resistance levels again and again, meaning it's constantly pushing past those old price ceilings that used to hold it back. Right now, it's trading around the $223 mark. And what's really clear on that monthly chart is this pretty beautiful ascending channel pattern. You can almost think of it like a clear highway to the stock price, respecting both the upper and lower trend lines really quite precisely. But okay, here's where it gets really interesting, maybe a little cautionary. We're also seeing signs of bearish divergence on the RSI, the relative strength index.
Right. And that RSI divergence, that's a critical signal. For our listeners, RSI basically measures the speed and change of price moves. Is a stock getting overbought or oversold? So when we see bearish divergence, it means the stock price is still making higher highs, but the RSI indicator is making lower highs. It indicates that while prices are climbing, the strength, the momentum behind that climb is fading a bit. It's almost like the market is whispering that maybe a period of consolidation or even a small correction might be needed to sort of recharge before the next big push.
Yeah.
It doesn't kill the long-term bullish trend, not at all, but it definitely signals waning momentum right now.
That's a really crucial nuance. Okay, so zooming in from that big ocean view, let's look at the weekly waves. How has Amazon stock been riding some of the more recent movements? If we flash back to June 2024, the stock made a really significant move. It successfully broke and, importantly, closed above that major resistance level from way back in November 2021. What was happening there? Why was that particular move so significant?
Oh, that was a big deal. A really big deal. Because it confirmed this powerful resurgence of bullish momentum. It cleared a major psychological hurdle for investors. Now, what followed was what we probably call a healthy pullback. The price dipped back into the $152 to $170 zone. And what's fascinating here is that this area, this zone, has since become what we call a strong demand zone. This isn't just a few buyers stepping in. It's like a psychological floor for Amazon now. It indicates a price level where institutional conviction seems pretty high, signaling good support if it dips again. After retesting that zone, the stock resumed its bullish rally pretty strongly, eventually breaking above the $200 resistance level in early 2025.
And it looks like that demand zone proved itself again more recently too, didn't it?
Absolutely. Amazon tested that exact same $152 to $170 demand zone again in April 2025. And just like before, it showed strong buyer interest there, bouncing back up. However, and this is really crucial for short-term traders listening, that weekly RSI still reflects the bearish divergence we just talked about.
Yeah.
So you've got this strong demand underneath, but also this persistent RSI caution flag waving. How do we reconcile those two signals if you're trying to make sense of Amazon's immediate future?
Yeah, that's the million-dollar question, isn't it? It's like that powerful undertow in our ocean analogy. Okay, let's bring the focus even closer now, right down to the immediate horizon. What's the daily chart telling us about potential next moves? Currently, the stock is trading inside what's known as a rising wedge pattern.
And this rising wedge pattern, it's kind of like a tightening spring. The price is moving up, yes, but the range is getting narrower. The momentum seems to be converging. It's often viewed as a potential warning sign, you know. It could indicate that buying power is getting a bit exhausted, suggesting maybe a consolidation period or even a short-term reversal might be coming.
So from this daily view, there are a couple of key potential price moves we're watching closely. First, the price could push up and retest that previous all-time resistance zone, which sits roughly between $230 and $240. Now, if the stock manages to break decisively above that resistance, well, the next logical upside target would likely be the upper trend line of that larger ascending channel we mentioned. That's currently near the $250 mark. So that's the bullish scenario, right? Assuming it breaks that tightening wedge pattern upwards.
But this raises an important question naturally. What if it doesn't hold? What if the stock doesn't manage to stay at current levels? Or what if that rising wedge pattern actually breaks to the downside? In that alternative scenario, if Amazon fails to hold above, say, $207 and breaks below the rising wedge, well, there's a high probability that the stock might try to fill a downside gap, meaning it could fall back to a previous price level where there was a rapid jump up, leaving a kind of unfilled space on the chart. In that case, it could potentially revisit the $195 level. For you, understanding this downside possibility is just as crucial as the upside. It's about assessing both risk and opportunity in the very short term, knowing all the potential paths ahead, not just the rosiest one.
Right, so that's the technical picture, the waves on the surface. But to really understand Amazon's strength, we need to feel those powerful currents underneath the actual business, its financial bedrock. What's the fundamental story telling us? As we said, Amazon AMZN is currently trading around $223, giving it a massive market cap of about $2.34 trillion. It's shown a pretty stable rebound from earlier highs. Now, when we talk about intrinsic value, one common method, a discounted cash flow, or DCF model, which basically estimates value by projecting future cash flows back to today, puts Amazon's intrinsic value somewhere near $242.61. That suggests there could be maybe around 10% upside from where it's trading right now.
But, and this is where connecting it to the bigger picture is vital, it's crucial to remember valuation isn't one single number set in stone. For example, other DCF models, like the ones from AlphaSpread, they offer a much more conservative estimate for Amazon's intrinsic value, placing it around $140.10. Now, that would imply the stock might actually be something like 36% overvalued at current levels. So the point about considering multiple valuation models, it's critical. Different assumptions about growth or discount rates can lead to really different conclusions. Always view these estimates as guideposts, not definitive answers.
That is a critical distinction, absolutely. So building on that, let's dive into some key financial health indicators. Amazon's PE ratio, the price to earnings over the trailing 12 months, or TTM, is sitting around 36 times. What's interesting here is that it's actually below the broader retail and tech sector average. That generally reflects pretty healthy earnings for a company of Amazon's huge scale. We also see other ratios that sort of paint a picture of high growth expectations from the market. Its price to sales ratio is 3.6 times, telling us what investors pay for each dollar of sales. Price to book is around 7.7 times, comparing market value to its accounting value. And its enterprise value to EBITDA is about 19 times, giving a clearer view of operational value, including debt. These kinds of numbers are pretty typical for companies where investors are banking on significant future expansion.
Okay, now let's talk debt and liquidity. Always important. Amazon's debt to equity ratio is roughly 0.52 times. To put that in perspective, it holds about $53 billion in debt against over $100 billion in equity. So we'd probably call that a moderate level of debt, especially for a company with its operational scope.
And in terms of liquidity, its current ratio is around 1.05 times. That shows it has adequate short-term assets to cover its short-term liabilities. A good sign of financial stability, Looking at recent performance and growth, the numbers are, well, they're pretty compelling. For fiscal year 2024, Amazon reported revenue around $638 billion. That's an impressive 11% jump year over year. And its net income in the first quarter is surged to about $17 billion, at a huge 64% increase compared to the same quarter last year. Operating cash flow over the last 12 months stands at roughly $114 billion, which is very robust. Free cash flow, however, did see a bit of a dip. It came in at about $26 billion, down from $38 billion the previous year. That's something to keep an eye on, definitely, though it's still a massive amount of cash generation. As for upcoming catalysts, things that could move the stock, there are a few on the horizon worth noting. Truist, for instance, recently raised their price target for Amazon to $250. They pointed to strong consumer resilience and, importantly, high expectations for the upcoming Prime Day.
And speaking of that, the extended Prime Day event, set for July 8th to 11th, is expected to drive maybe up to $21.4 billion in sales volume. That's a huge potential boost. We also saw Q1 revenue beat expectations, coming in at $155.7 billion. And their super profitable AWS cloud business grew around 17%. Now, the outlook was maybe slightly muted on operating margin guidance, but the overall picture from Q1 was still strong. And of course, the Q2 earnings report expected in late July, that's going to be another major potential catalyst everyone will be watching very closely. So let's try to bring it all together. What does this blend of technical signals and fundamental strength really mean for you, the informed observer trying to make sense of it all? We've looked at the charts, we've dissected the financials, now it's time to consider that full picture.
Yeah, I think in summary, Amazon clearly remains a financial powerhouse, no doubt about it. It consistently shows strong revenue growth, generates really robust cash flow, and it maintains what seems like a moderate, manageable level of debt. Now, its valuation, it appears fair. But again, it's important to remember it could be seen as slightly undervalued using one intrinsic value model, yet look quite rich based on more conservative ones. This just reinforces again how important it is to use multiple lenses when you're analyzing something like this.
That's a crucial distinction. So if we weigh those different valuation viewpoints alongside the technical signals, what's the sort of combined message for someone looking at Amazon today? It almost feels like a compelling head or tails kind of scenario.
Yeah, it absolutely does. I think that's a good way to put it. The key insight here maybe is that Amazon offers this compelling head or tails situation. On one side, you've got the potential for an upside surge. That could be driven by these immediate catalysts like Prime Day and the upcoming Q2 earnings, possibly pushing it towards that $250 mark we talked about. But on the other side, its really robust fundamentals provide a strong safety net. They make an extreme downside seem less likely in the near term. We're seeing that potential support around the $200 level holding up. So it's this balance really between potential growth and that inherent stability. What stands out most to you from this whole picture we've painted?
Thank you for joining us on this deep dive into Amazon stock and its underlying business. We really hope this exploration, looking at both the technical chart patterns and the fundamental financial health, gives you a clearer, more nuanced understanding. It truly is like trying to understand the wave while also feeling those powerful ocean currents underneath, right? Hopefully it helps you navigate these complex waters a bit better.
Absolutely. And as you continue to process all this information, here's maybe a final thought to ponder. Given Amazon's consistent history of just relentless innovation and its absolutely massive financial capabilities, what might be the next truly transformative venture or technological breakthrough, something that could fundamentally reshape its long-term trajectory, moving even beyond its current core businesses? And, how might that unforeseen future impact its stock performance in the years to come? Something to think about.